Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So this week we've still got a sideways market, hasn't really gone anywhere. We're going to end the show by talking about bullish volume scans and how you can use them to kind of evaluate what's going on with a stock, and we'll kind of work through that. But the market continues to lose steam here as this sideways trend rolls on. We just have, more and more industries breaking down. So out of a chart list I monitor, over 10 industries had their weekly PPOs go back below zero this week. So it just says the market's really losing its upside pressure. And we've seen a few technology names still hold up, but in general, it's been difficult to make money in here. So how does this compare with previous bull market launches? And I'm going to cover that off through two different tools because it's starting to become more clear on those tools that we're just not getting a bull market thrust here, and the market is trying to be resilient, but literally for every stock that goes up, one or more is going down, so it makes it very difficult to own. And again, the bullish volume scans, they can be helpful. So if you like the things we offer here on the Market Buzz, you can also find out more information over at Osprey Strategic. It's a really hard time for people to be invested in subscription services for the market, because if the market's not going anywhere, they're not making any money. The real problem is the place where we make the most money is when we finally get the turn. Now, is that June, or is that October, or is that July? We just don't know. But one thing I do know is when we get those turns, like in October of 2022, or the January breakout, those are pretty bullish places on the chart. So it's that kind of thing that we want to be focused on, and I'd like to help you with that. Anyway, if that works for you, feel free to go over and try our 1 month trial offer. I had somebody mention, Greg, I haven't made a trade for a month. I'm not making any money here. But what we're trying to do actually is protect the capital, so when we do get the thrust, we're ready to hit the gas pedal. And I'll be speaking at the Money Show. It's a virtual event, charting the market changes for 2023. And that is next Wednesday, roughly in the middle of the afternoon. I want to say around 1:50, I think. But it's just a half-hour presentation. I'll put a link in the show description here that'll show up on the StockCharts TV page. And then the idea being, if you'd like to join in, I'd appreciate you following the link over there so they know I did talk about the presentation. But the whole idea here is understanding the macro frame that we're in and why it's a pretty important timeline that we're watching here. And there's so many charts that are set up with major long-term influence. If we don't break out to the upside, what happens here? And so that's kind of the main thrust of that show, is explaining to people how important it is where we're at in the market right here. So let's jump over into some charts. What I'd like to show, let's just tune this up a bit. What I'd like to show is, first of all, just the S&P 500 and the Nasdaq side by side. And over the last 2 weeks, again, if you were in here on April 19th or you were here on May the 9th, you're sitting at the same levels. And we've gone higher and gone lower. And actually last week on the S&P 500, we actually went higher than the highest high in April and lower than the lowest low in April, all within the first week or first 4 days of the month. So it was a pretty wide-ranging first 4 days. And now we're just kind of grinding sideways here. And then for the Nasdaq, it continues to try to test to break out to the upside, but you can see the momentum indicator here is starting to slow down just a little bit. When we get to the daily, without question, the Nasdaq is still outperforming the S&P 500, and that was after roughly from mid-March to mid-April, it really started to downtrend, and then we saw the earnings come out from Microsoft and Meta and Apple, which really pushed the chart to the upside. So when I look at these charts, one thing that I'm noticing, PPO is trickling lower, but it's not going down like it did in December or February. So maybe there's a hope here we start a rally. Now that would be a surprise to me because my strength indexes are all falling below 50%, suggesting that the market's due for a bigger pullback. But when I look at the Nasdaq, we've still got a series of rising lows on the momentum indicator. Nothing wrong with that, but look at the volume in the last 2 days. This volume here literally goes all the way back, pretty much off the charts in terms of the QQQs. So there's not a lot of pricing activity going on, and yesterday was the same, and you could just see a real lack of interest from both buyers kicking in here to start pushing stocks up. And, we did come off the Apple and the Meta and Alphabet, Microsoft, Amazon, all of those earnings were in this kind of cluster in here. So that did push the charts up a bit, but we're definitely quiet here looking for some buyers trying to show up. Now, when we look on the weekly chart, our full stochastic starting to roll over on the S&P 500. That's no big deal, but again, kind of if you line up all these other ones, it was a not bad place to be aware of the market being ready to roll down. And then we've got a nice trend line that we can establish under the PPO, and when this starts to roll over, especially after having a ledge like this to sit on, so when I can draw a line like that, I get more interested that we're coming near the end of the trend. Now, over here on this one, I would have drawn the line in here. And let's just, pick a place and time here. If you drew it off the top here, it's going to get you in pretty much at the cross here, right near the end of October. And then there was also one in here around the end of June, early July, which was a nice entry point as well. So these trend lines can be helpful. I like to use them a lot. Some people don't believe in them. For me, I at least want to be aware that the trend's changing from up to sideways or up to down and make that distinction. So it helps, but it's still not necessarily that you're imminently facing a roll down in the markets if that does start to roll over. One thing I do want to point out is on Bitcoin. And Bitcoin, you can just see this is the rough trend here. So 30,000 on the high side, 27 on the low, and just chopping around in between. But Bitcoin, this price action on Bitcoin, if you go all the way back to November 2022, it's roughly the same chart shape as the Nasdaq. And so I think I even created a chart of that actually. Let me go get it. Bitcoin. So what you see on this chart is the Bitcoin chart is going higher. The relative strength on Bitcoin is starting to slip. And then when we look at the volume, it's continuing to decline. And that compares with what we're going to talk about, bullish volume jumps on the stock. And we've also got a trend line under the PPO that basically goes all the way back to November when the stock market had tried to rally out of that October-November low and get going. I think this was the FTX move down. But now we've been running up here. So we started to break this trend line. This was the banking break, and we quickly recovered from that. But now we've got a little bit of a head and shoulders top here. So something like Bitcoin, totally, I'll call it non-related, but the charts correlate quite well. To me, that's something to be aware of. So if we wanted to show that correlation, we would just clear all this out of here. And I'll just get rid of all these other indicators. And then we'll just save the chart as Bitcoin with Nasdaq. And the idea here, what I want to show is just how you would set up the chart. So we're going to do it based on performance. We're going to do one in blue and just pick a different color for the other one. Now, what we do when we want to overlay the price of something else, we're going to put in the ticker symbol for it, but we have to position it behind price. We're going to use a solid line to do that. We're going to make the color obviously different. So let's go with brown. And then, and we want the height to auto fall, but we can set it to 1 so it's got the same scale in terms of chart move. But what you see here is the rhythm isn't that far off. And if we open this up to a full year, going all the way back to the stock market highs of November, the two, while they aren't correlated on a percentage move basis, you can just see the general trend of down and up is the same. Now, in this case, I've put it as price. You can also put it as price performance, and then that's going to show the percentage change. What you see here is during the FTX, Bitcoin was outperforming the Nasdaq, then really started to underperform, and is now starting to work its way back up. So the distance from the low to up here is definitely more than it was for the Nasdaq. The real question, if they follow each other so well, is Bitcoin just kind of starting to, see the same sort of lack of upside pressure and ends up rolling down. So anyway, that's one of the things I wanted to cover off here was when you look across the charts, you're looking for a whole bunch of things that are either starting to turn, and here's some totally unrelated asset that you would think of, quote, currency. It is really behaving with a similar risk on, risk off pattern. Even the highs and the lows in here, while the moves may be more extreme, you're still seeing the same chart shape. So all of that adds up to me to tell me that we've got, a bigger problem going on here that just doesn't seem to want to go away. So let's go back here. And I'm going to just grab gold and the gold miners. And there's a reason for this. So gold is trying to break through, just go down here, break through this big all-time high on the weekly charts. And what we want to see is you can see volume is starting to come in here. The real problem is on the gold miners, we're not seeing that same sort of volume thrust, and we aren't seeing the move show up on as many of the mining charts now. The big names like Agnico, Eagle, are starting to move or have moved up with this big thrust, but we've still got a lot of small gold names that really haven't taken on the big upside thrust, and I would have expected them to outperform here. So I'm watching gold to see if it can get through this double top on the gold miners, and again on this bigger picture through the whole topping structure for gold. Watching that quite closely, I want to see that work out. Another area that I always like, and there's a few technicians out there that think about it like I do, but what we're talking about here is this is oil. And again, why is oil going down even while the Saudis continue to slow production? Why can't oil get going? And to me, it's an economic indicator. Globally, we use roughly 100 million barrels of oil a day, and they've taken roughly 3% of the oil off the market, and we still can't get the oil stocks and the oil price to start moving higher. I think when it does reverse, I think it'll be a sharp reversal, and it will be one that we definitely want to own. But we're going to draw some trend lines on here, pointing out this big downtrend. Same thing with crude oil here. This was the OPEC gap up on the change in production volume. Now, remember how I mentioned the trend lines? Well, what I'd like to do here is on this trend line, I would draw it in coming off that mid-2022 high. And the same thing over here, probably any sort of push back above zero would suggest something changing, and I'd at least like to make sure I'm interested there. But what we haven't seen, and again, in a bull market, typically this will stay above 50 as a rule or as a guideline, and in the bear market it stays below 50. And we kind of saw that here where it stalled, and then it had one thrust up towards the end of the year. And that's when we really thought the bull market was going to start again. But since then, it hasn't been able to catch on. So to me, that's a pretty important qualifier here, that we're just not getting the price action that we would need to see for this next leg to start. And what you'll notice is when this scooter ranking starts to fire up, that's probably a pretty good clue that we'd like to get more involved in this, and that hasn't happened yet. Okay, so the second thing I mentioned in the table at the beginning here, let's just go back to that, was how does this current situation compare with the previous bull market launches, or where they started to take off from? And what I want to show here, I've been using this chart with my clients lately. The big thing, if we just look at this middle area and ignore the pricing up top or the chart on the lower panel, just look at the middle. And if anything comes to me on this chart, it's just that this period in here and this period of weakness in here where we, basically couldn't get above 50%, seem to be more correlated. And so that's the big bear market of 2007, 2008. And here we are trying to get going, but we literally just can't get the thrust working. And right now, so this is the bullish percent index, and right now we only have 35% of the stocks on a buy signal. Now, this is for the overall Nasdaq, and it is a weaker market just because of its volatility. It's got way more biotech that's either win big or lose big. Some technology companies, you might remember the whole SPAC craze we had, a lot of those are living near the bottom. So it's just an interesting representation, I'll call it, of growth stocks. And what we're seeing here is that this picture doesn't look particularly good. Now, the other thing that you'll notice is in 03, the stock market bottomed late 02 for the Nasdaq and started to move higher. But what happened here was this surged all the way up to about 70%. And in 09, it surged all the way up to 60%. And even in the 2010, 2011 dips, we got back up to these really high levels. And then we got to 2016. This was the commodity pullback. Again, another economic indicator by oil. And then we bottomed in early January or late January of 2016 and took off. Got all the way up to 60%. Coming out of the 2018, we didn't get as much of a thrust. But then in 2020, we paused a little bit in here, but we kept going, and we made the highest rally going all the way back to the 2002, 2003. What's different this time? We can't even get out of bed here. This thing barely got out of bed for a pee break and then started to decline again. And we're sitting here with only 27% of the stocks above the 200-day moving average. That just does not look anything like any of these other breakouts. Now, let's go look at the Nasdaq 100 and see how did it do. Well, this chart's really more interesting to me because here's what we're dealing with that hasn't really been seen in the last 20 years. So back in 02, we dipped down to this very low level. And each rally, we tried to jump back up. And then in 08 and 09, we only got up to around 50%. And then once we started to go, that was a pretty good sign. We have literally swung to and fro for a year and a half here where really no pattern has emerged on this other than to say the market's very undecided about direction. I will say that when you're living in the top half, generally, you're in the big uptrend. And we've been spending an equal amount of time down here in the bottom as we have in the top. Now, there is a series of rising lows here, which is more bullish for sure than not rising lows. But we don't exactly have this bull market euphoria. And the same thing happened on the percentage of stocks above the 200-day moving average. In 02, we got way up into the 90s. In 09, up into the 90s. In COVID, after COVID, like look at how timely this note is. A bullish reading above 90 is a massive bullish clue. And, you know, we just kept going for another whole year after that. But we just haven't been able to, you know, we're 20 points short of that, and we've been trying to get going, but it's really been a struggle. And so what we saw back in 05 and 06 was we'd kind of rally and then just fade again. And so these dips don't look very big, but they're actually quite important. So from the perspective of just buying the Nasdaq large caps, it's still choppy. It still says we don't have the same sort of breadth. Now, looking at the New York Stock Exchange, so the first one was the overall Nasdaq, and now this one is the overall New York Stock Exchange. We see that same sort of trend development where this is behaving much more like a bear market than the big bull markets that we would have got into. And once we got up there, we kind of would have stayed up there for like a year and a half. Well, we're just not getting that sort of bounce. And we did get an initial thrust in early 2023. I'll call it January. And then literally everything just rolled over. It just got up and it stalled right away. So when we look at the percentage of stocks above the 200-day moving average, we're sitting right here around 45%. But again, look at what happened in 2009 and in 2012, in 2016, in 2019, in 2022. We had all of these big thrusts. And this time we got up there for a couple of weeks, and then we literally failed, rolled down, and we've given, we were at 72%, we're at 45%. We've given back at least a third, almost half of the stocks that were above their 200-day moving average are now not, even though the S&P 500 is up near its prior highs. So this chart isn't very strong, and to me, again, it just looks like we're still in this bear market configuration, both in terms of percentage of stocks above the 200 and the bullish percent index, how many are on a buy signal. Now, when we go to the S&P 500, again, we've got that same sort of wild, swingy period for the percentage of stocks above the 200-day moving average. And when we look back in 02 and 03, we were living down here near the lows and we had trouble getting back up above 65%. During the whole 2008, 2009, we had trouble getting back up. As we move to more and more ETFs, this seems to swing way farther. So we've gotten way up to 80 and then back down to 10 like almost instantly. So real wild swings, but once again, we just never got this big bullish thrust that we would expect to see at the start of a new bull market. So, I was calling a new bull market in October. I said, this could be the low. And then in January, I said, this is a really nice place to get long because we're making a higher low on our momentum indicators and we're going to surge from here. The real difficult part here is we're just not seeing that. Now, what I didn't talk about was on all these charts, we're sitting on this 14-year trend line. So if this isn't going to play out, this is the price of the S&P 500. If this isn't going to hold, this is a pretty critical place because what happened in 03 and in 2000 and in 2007, when we started to break these big long trend lines, it was a big deal. Now, this is the COVID dip below, but you can see we're just taunting this trend line here for almost a year and haven't really been able to break out. Now, I can add another 5 years here or something just so you can see the 2000 trend line. But as this came up and broke, it was pretty important. So we're sitting right here. We've got the characteristics of a bear market, and we don't really have the thrust that we need to get a new bull market started. So that's one of the particular reasons why I think it's so important to protect your capital. Now, going back to the Nasdaq or the New York Composite, same thing. We're sitting right on the trend line. We're actually making quite a bit lower highs on this one, so that's quite a concern. And then on the Nasdaq 100, we're sitting right on that trend line. So all of these are really important, and I think places we'd want to get going from. Okay, so the last thing I mentioned was I wanted to talk about a bullish volume scan, and the idea being, in this case, the stock typically trades a low volume, and then all of a sudden you have one day where it jumps out of its skin and literally attracts 3 to 4 times the attention. When you get that, there's something going on the stock that's changing it. Now, just because it gapped out doesn't mean that's a great place to buy. But what you'd like to do is start to watch and see if it consolidates. Does the volume fade off? Does the stock give it all back right away? And what we're looking for here is that continuous volume. So if we look over here, we see a low volume, higher volume, higher volume. This thing's definitely ramping up as a stock, and it's outperforming the S&P 500. and it, back here we were flagging it as a breakout, and then it's been trying and trying and trying, but this market's been so choppy, these haven't really kept going. Whereas in 2020, at the start of a new bull market, they were literally launching forward and just kept going. So we like to use this bullish volume scan to help us look for these opportunities. And in gold here, you'll see Agnico Eagle put in one of the biggest volumes ever here as it came down to the lows in February. And then in March, volume dries right up and it starts to expand in volume. And this thing literally took off. And now we've still had some volume surge, but you can see there's quite a bit less interest than we had on those big surges, even though it's trying to break out to new highs. So volume can help us be something to look for stocks that are starting to break out. It really helps if the overall industry group moves, and even in a broader context, the whole stock market is starting to set up into a bull market pattern. So here's C3AI, and what you saw here in January, it was looking awful, and then it started to move, and then all of a sudden, late January, this thing just went on launch mode, consolidated for a while, tried to break out, failed. And now it's just pulling back, and the volume is very, very light. So far we don't have anybody showing up as a big buyer here. The chart's got some resistance right around $20, which is the base of this whole trading range. Any sort of move back through that would be pretty bullish. And I'd be watching for this stock to start to get more volume accumulation. Now, I still think the problem is the overall market. But when the overall market turns with this sort of volume, there's somebody really interested in this stock, and we want to be ready to start to buy this thing when we get a better backdrop, and hopefully we'll get this sort of a move that we saw back in January I'll call it on stronger data. And so Align, we had the same thing here. This chart's had lots of big volume jumps, so it's quite a choppy chart, right? There's big gaps all over it. What we want to watch for is, can this consolidate sideways, and maybe you try to buy it near the low of the range and catch it on the way back up. I would just say if the overall market was setting up that it looked like it was going to turn, I'd be more interested in that. I do like the fact that you can draw a trend line under the PPO here, and I want to see that trend line hold. I'd like it to turn and reverse right up here. If it starts to break down, it's going to look a bit like the Bitcoin chart in terms of starting to break its uptrend on the PPO momentum. The same thing we'd see on the Nasdaq. So if all of a sudden all these charts start to break down together, that tells me the correction is actually starting to kick in. And I still want to use this bullish volume scan to have these names in my register so that when we do get the turn, you can jump in on them. So we have a whole series of Osprey opportunities, and I'll just show you what I mean by that. So we've divided them up by different types of groups. So we've got artificial intelligence and gold miners and agriculture and gene editing and industrials, so that when the market does turn, you can jump in and find all of these setups as they're starting to turn and hopefully make a little bit more money. So with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV. Thanks, everybody. Bye-bye.